So I'm going to give you just a few opening remarks as we talk about this particular sort of sector subject. We've heard a lot about nature, of course, and just from Professor Dasgupta, and he said something very simple but very important. He said, nature is missing, and that's a disaster. Well, what do we mean by nature is missing? What we mean is that if you look in a terminal that, such as a Bloomberg terminal or some of the other terminals that are used by the financial sector worldwide to make their financial decision making, when I last looked at them some years ago, I was looking at a Bloomberg terminal and thought, there's a hell of a lot of data in here on financial capital, but there's not very much on natural capital. And this means that a lot of investment and lending is blind to the dependency it has on nature and the impact it is having on nature. Well, I'm glad to say that quite a lot has changed in the last few years, certainly since those 5 years ago. A lot's changed. 5 years ago, we had the Paris Agreement, and that was the first time governments sort of looked like they were going to agree on something to do with climate. And then we had another thing that was very important that came up at the same time, pushed forward by Michael Bloomberg himself and Mark Carney, then governor of the Bank of England, and that was called the Task Force on Climate-Related Financial Disclosure. And these two things work very powerfully to raise attention, both from a regulatory point of view and the specter of stranded assets, and a framework of how do you actually deal with the issue of emissions and climate and all of that in your investments and lending. And we're going to hear a bit, you've already heard it mentioned, the TNFD, which is the nature-based cousin of the TCFD, which is just launching. It launched a few days ago, but we're having a formal presentation tomorrow with the new co-chairs. Going to talk a bit about that. But there's been a lot of noise about nature in the last few years, and I don't quite know why. I've been involved in this space for about 40 years. So a little about me. I'm Andrew Mitchell. I started out life as a zoologist, hugging orangutans and trees, and I found I couldn't save them that way. So now I hug asset managers and bankers. And I find it's all about the money. It's all one thing, you know, you can try and save lots of wonderful areas. And I did a lot of that in the past, and I've watched them go up in smoke over the last 30 years with the wonderful indigenous people I used to work with and walk silently through the forest, almost vanished, sadly, with these enormous pressures on nature through the supply chains that feed us and provide us with the products that we need. But unfortunately, most of the information on that wasn't really getting through to the financial decision-making process. And so you get a tsunami of money that's up against the tiny pennies that conservation can put up against that tide, that the relatively small amount of money that governments can put up to protect nature. And consider this, if all the money that governments are putting out to protect nature in the world today was doubled, it still wouldn't come close to the harm that's created by subsidies that are subsidizing the wrong kind of businesses, doing the wrong kind of thing for nature. They're 5 times more than all the government money that's going into nature, or possibly even more than that. So we've got a big uphill struggle. We've heard a lot about plastics in the ocean, burning of forests, changing diets, the rise of veganism. These are going to change the way we have an attitude to nature. But I kind of think the world has been on a kind of burgers and booze mentality in the way in which we handle nature and look after our planet over the last 30 or 40 years. And the problem is, as anyone who knows, if you spend a life eating burgers and booze and drinking, you get sick. And it's no different with the earth. And what we're seeing is how the earth reacts. It produces pandemics. It catches a cold, just like the rest of us. And the latest one is called COVID-19, and it won't be the last. But what is really interesting is that COVID-19, which has turned all our lives upside down, is in fact a tiny speck of nature. That's what we mean by unrecognized biodiversity risk. It has been driven probably by environmental degradation, the illegal trade in wildlife from forests into parts of Asia, the mixing of humans with animals on the slab, and zoonotic transfers, which allow these viruses over time to mutate constantly and sharpen their act. And out comes COVID-19. There have been quite a few before, and despite what people say, maybe, you know, some people argue that it might have been altered in a lab. we have no real evidence of that yet. And if you look at the genome inside the virus, it doesn't look like it's been tampered with by humans, but it is a product of nature. And well, the IMF calculated that the lost production around the world was running at about $24 trillion. It's absolutely huge, the impact of nature. Now, a few years ago, when I started speaking to treasury departments around the world and said, you know, nature risk is really big, you should pay attention to this. They said, well, we're really busy doing climate. Can't nature wait? And I said, no, because it's bigger than you think, and it can be faster than you think, and it can hit a lot of different sectors. It's not just about agriculture. And most of them said, you know, leave us to do climate. Then COVID-19 happened. Well, they're not saying that anymore. So what's happening is that I'm finding that banks, insurers, investors are suddenly starting to take this all very seriously. I mean, if you go back 5 years, ESG was a couple of people down the end of the passage who didn't make any money for the firm and nobody paid attention to. Well, the biggest recruiting that's going on in the finance sector now is ESG teams. It's amazing. But E today is mainly a C. It's really all about carbon and climate. That's what people are measuring. They're not really looking at water, forests, landscapes, oceans. That hasn't quite come on the radar screen. But as you'll hear later with our new task force on nature, I think that'll change over the few years. So I think what we want to do in this session, I think let's explore, you know, where we are on nature and how is it being treated? Where is investment flowing? You know, where's the upside opportunity for investing in nature? Let's have a look at that. It's not all about risk. That's part of the story, but what about the upside too? And we've got a really good panel who can take us through from, you know, what's the business case for saving nature from a financial point of view? I'm going to ask that question to Charlotte Kaiser in a minute. Charlotte is with the TNC, the largest NGO in the world, based out of DC in America. I think you're there, aren't you, Charlotte? Are you there in DC right now, or are you somewhere else?
I'm not. I'm elsewhere, but we are headquartered in Arlington, Virginia, just outside of Washington.
Excellent. Well, we're going to come to you now. Charlotte oversees NatureVest, which is the Nature Conservancy's conservation investing division, whose mission it is to create and transact investable deals that deliver conservation results and financial returns to investors. She started her career at the Nature Conservancy developing conservation notes, which have raised more than 50 million of debt capital for TNC for impact investors. And then I'm going to talk, we're going to have got Antoine Sire here as well. Antoine, hi, from BNP Paribas. Very senior guy, by the way, in BNP Paribas, one of the top cats at the bank. But Antoine looks over a giant global bank that reaches out across the world. So we'll get a different perspective from Antoine. He is, in fact, a member of the executive committee and head of company engagement at BNP Paribas, based, of course, in Paris, or headquartered there, with a mission to make the bank's commitment to society one of its strategic assets. And he was appointed communications director of BNP in 1997 and of BNP Paribas in 2000. And then, of course, we're going to move across to Madeline, to South Africa. Now, Madeline Ronquest is at FirstRand Bank in South Africa, and much closer to nature in some ways than the rest of us, right there with Africa's huge amount of natural capital assets. So maybe it has a slightly different view of nature. And she's going to tell us a bit how things look from FirstRand Bank. She's head of environmental and social risk management at FirstRand Group, and her portfolio includes eco footprint management. I'm not quite sure what that means, Madeline. I'll have to ask you that. And then green finance and positive impact banking, climate change and environmental and social risk. And she's been at the group for 15 years. So we're going to look forward to talking to you, Madeline. And then finally, last but not least, we've got Reza Marvasti, who's from ISS ESG. That's a bit of a mouthful, but Ravi can translate it for us. But basically, it's all about measurement. It's about data, providing tools to the finance sector that they can use to measure this. So he's ISS ESG provides solutions to investors to develop and integrate responsible investing policies and practices and engage on responsible investment issues. So Reza is Associate Biodiversity Product Manager based in Paris. So excuse me. My wife just bought me a very nice cup of tea, so I'm just going to have a quick swig of that as we take a breather. Ah, delicious. There you are, tea, a bit of nature here right in our conversation. Now then, Charlotte, let's come to you. What's the business case for nature? You know, when I talk to a lot of people in the finance world, they say, well, you know, nature's not a really big thing for us. I mean, you know, it doesn't employ many people. It's mainly about agriculture. It's a small part of GDP. What happens if we just continue to take that attitude and we continue tearing down nature to make it into something else that you can sell without thinking about the stock of nature that's left?
I think you know what I'm going to say in answer to that, Andrew. Thank you so much for having me today, and to my fellow panelists for joining me. I'm really looking forward to this conversation. So nature represents about half of global GDP. It contributes upwards of $44 trillion in economic value. So what happens is pretty challenging global economic conditions. And yet, you know, investments in natural capital represent just 1/10% of global GDP today. So there's a huge gap in what's needed. And to your earlier comment, Andrew, there's the recent research by the Nature Conservancy, the Paulson Institute, and Cornell University showed a $700 billion annual financing gap for nature, much of which could be closed by reversing harmful subsidies to bad agriculture practices. But there is a real need for investors to both quantify the risk and assess the value of natural capital in order to close that gap. I'll just share one example of what that can look like. It's striking how few investors are doing this today. A recent survey by Responsible Investor and Credit Suisse of about 300 different asset managers found that only 1 in 10 has a biodiversity investment target or a natural capital investment target. And the financial services industry is ranked 7th among industries at risk from natural capital decline, which is remarkable when you think about, for example, the sovereign debt of a country like Argentina, which holds no foreign currency reserves, but which relies for its economic well-being on tourism, beef exports, and wine. Let's think for a moment about the natural capital assets underpinning those 3 industries and consider the risk of that investment in the sovereign debt of Argentina, if they should be declined as a result of the collapse of natural systems. So it's really critical that investors start to understand the systems interactions here and to begin to seek help from Reza and others on how to assess that impact. At the Nature Conservancy, and here's Antoine showing our...
No, it's don't pay attention.
Okay.
I didn't realize I could break your concentration. It was...
Oh, no problem, not at all. So at the Nature Conservancy, we're trying to help support investment in natural capital by structuring transactions that deliver commercial returns and conservation. Because one of the big barriers is a lack of opportunity for investments. So one example, Andrew spoke about our conservation note, which was a general obligation debt offering on the Nature Conservancy's balance sheet. And you could lend us money and we would conduct conservation projects with it. Conservation is very capital intensive. So there's real opportunity for investors to participate here. A second example is a forest fund that we launched 2 years ago, the Cumberland Forest Project. It's a $130 million fund protecting 250,000 acres or 100,000 hectares of working forest in the central Appalachian region of the North America, which is a really critical linkage piece of habitat for species migrating through climate change. We're also going to be sequestering 5 million tons of carbon, starting to show the link between nature and climate through that deal. So, and today we're trying to structure deals that support capital at a scale that institutional investors can participate in. It's challenging, and we can talk more about that as the hour goes on. But I hope it's clear that the risk is extremely present for investors, and the returns are there as well.
Oh, that's interesting. The Cumberland deal that you did, just give us a sense of, you know, it's a $100 million sort of fund, but what are the benefits that are coming in sort of nature terms? And has the carbon market, there's a bit more attention on it, has that helped you bring more money in?
Yeah, absolutely. Well, yes and no. So in terms of the benefits, we're managing the forest under FSC certification, Forest Stewardship Council. So longer growing cycles, lower cutting volumes every year, and that creates more tree growth, which sequesters more carbon. It also helps support biodiversity through broader riparian buffer zones along streams. This is a very watery environment. These are the mountains of the Appalachians are these incredibly intricate folds and with rivers and creeks running through all of the valleys. So we're managing for habitat for critical amphibians, as well as for sustainable timber, which is one of the sources of revenue, and carbon. Most of the carbon sales we've done to date have been through the compliance market in California. But it was interesting in marketing this deal to investors how few understood that market and how many fewer still believed in it. And so for those of us in this field who are seeking to attach economic value to environmental assets through market-based mechanisms like the carbon market, there's a long way to go in terms of educating investors on the validity of that value and the reliability of that revenue stream.
Charlotte, thanks so much. Let me just turn to Antoine now. And, you know, we've heard a bit of a case there, how important nature is, you know, half of global GDP. You've heard me banging on about it. But how does this show up on the risk screen in a big global bank?
Well, first, thank you, Andrew, and I'm really happy to be with you and all the panelists today, which is the day before an important day, which is the launch of the TNFD. So, because you and I have been part of this effort, really, we can take 1 second to share the happiness of being at least at the real beginning of the TNFD story. Maybe just one note also about BNP Paribas. We have been lucky enough to be able to put biodiversity and nature in our culture to start this a few years ago. I was just showing the reason Charlotte was disturbed just before is because I was looking for a book we made for our employees about all the research on biodiversity and climate we do finance since 2010. And obviously we do not advertise a lot on this because people would certainly say this is greenwashing. But in fact, it is not greenwashing at all because it's important climate and biodiversity research. And while we don't share it very much externally, we do share it a lot with our employees because we want them to have this culture. And we also have one of our board members who is a board member of Biodiversity International, Marion Guillou. So we have pretty much incorporated biodiversity within our culture. And we believe this is essential if we want the bank and the people who make the decisions in the bank able to incorporate it in their business and risk models. So yes, we are starting to integrate biodiversity in the way we assess our clients. We are starting with our 700 largest clients, and we are developing a model which is a model where all those clients will have marks that will be given besides the marks that are given for credit rating. There will be a climate, a biodiversity, and a human rights rating. And we will need to collect comprehensive biodiversity data on our 700 largest clients to be able to run this model. So obviously, we are already very much able to define that a certain client is at risk because his model is threatened by problems linked to biodiversity, or by the fact that he didn't anticipate enough, or by the fact that he has I would say a harmful impact on biodiversity. But besides this, I believe it's really the end of the cherry picking, and yes, we are taking this comprehensively as a risk in models that are run by our Department of Risk.
So can you give me, sort of just to bring it to life for the audience, an example of something specific that the bank is doing that is linked to nature, either from an investment point of view or a risk screening point of view, or that you might do in the future?
Yeah, sure. I believe it's, you know, you have at the same time to have very comprehensive approach of topics such as nature and climate, and at the same time you need to address the issues that are understood as absolutely essential. So this is the case, for example, with Amazon and Cerrado. So we have adopted policies that restrict largely and create very serious conditions for us to finance businesses that are operating with soy and beef in Amazon and Cerrado. So it's we are quite pioneering in adopting such policies, and sometimes we consider that, and this is something we will consider more and more, that we have to define a paper that will cover the way we approach a full ecosystem. And the first ecosystem on which we started to define such paper is the ocean. So with the ocean, we have an approach of how we incentive our shipping clients to change their energy model and to improve it. What is our relationship to business involved in fishing, and we will define more and more the conditions that will allow us to finance such businesses. We are launching investment dynamics, such as our participation of the project of the Global Coral Reef Fund. So we are trying to, at the same time, to address the problem comprehensively through our risk model, and at the same time to take initiatives coming from the problems we see in nature, and try more and more to take decisions inspired by the need for solutions to those problems. Obviously, it's only the beginning. There are plenty of things that are missing. We do not say that we have done the job, but well, we say.
Let me go across to Madeline. Let me hear a bit more now. We'll move to a different part of the world, in a sense, not a global view, but a regional view from Madeline Ronquest at FirstRand Bank. She's based in Johannesburg. So Madeline, tell me how you see these things. What I find is the countries that are closer to natural capital might have had a more developed understanding of the impacts and dependencies on nature. I find this in Latin America, for instance, where you've got the vastness of the Amazon. Are you finding that at all in Africa?
Andrew, I think it's a mix. It's probably a 50-50 split. South Africa is known for its national parks, and as is Botswana and Zambia, where we also have an operational footprint. And I think it's top of everybody's minds. And I think in the banking sector, we've been very successful so far to manage negative impacts, you know, on wildlife, on species, on high conservation value areas, and so on. And so we've made a lot of leeway in terms of understanding that. But human nature is such an interesting thing. I'm saying this, from the point that I'm not a financial banker. I'm a scientist, natural scientist, and a conservationist in my heart. So I study people as well and how they react to these impacts. And it's interesting that we've had some incidents that came very close to disasters. And one would think, human nature is very strange. You don't miss something until you miss it. And so we've had previously in the country, we're going through it at the moment again, load shedding, where our energy is just cut off and we go onto a schedule. And everybody now knows that it's a problem, and we've kind of made backup plans and we live with that. We've adapted to it over time. If we look at the drought scenario in Cape Town quite recently, they were days away from day zero, where the water was literally running out and the taps were going to go dry. And over the period of trying to mitigate the inevitable impact, the Cape Town City Centre had actually done a lot of work in education and awareness and limiting exposure, teaching people to use less water to shower and to use natural resources conservatively. And what is interesting, the outcome from that is that, so the rain returned, there's still a dry spell, it's seasonal, they will go back into a severe drought. 50% of people have retained those good habits. And I would say 50% of them hadn't. So they are back to their old ways, destroying nature in their path, and so on. So we have 95,000 different known species in sub-Saharan Africa, of which 22% is already under threat. And it's because people don't see the benefits, straight up, and they don't understand what the impact is. Now, a few examples that makes people kind of aware and set up is that we are so used to paying for services. So, if you think about the services that nature renders, we will, paying a lot for food production and clean water, regulating climate and disease control, as you say, from animals and other, and supporting crop pollination and nutrient cycles. But, as much as this country is set on recreational facilities and tourism and the national parks and so on, we seem to just take it for granted that natural capital and biodiversity is there for us to abuse, I think. And that's just me kind of preaching. But it's interesting to me to see how people react. And I think basic principles that we are trying to bring back into our own community, we have 50,000 people working for my organization, is to just basically talk about keeping things simple and only using what you need, and not to waste. And I'm surprised that the more affluent people in the country, it seems, are more aware of what they use, how they recycle. However, they are also the ones who can afford to have a lot of things, and over-consumerism is obviously pushing the use of natural capital unfairly so into the negative.
I wonder, Madeline, how are you changing your policies inside? You've sketched a very good example of it. What does that mean to you as a bank? Are you starting to say, well, we're going to try out things like sustainability loans, where you might offer people cheaper money for doing the right thing? Is that on the radar?
So that is on the radar for us. We're talking about ESG financing. So definitely looking at how that incorporates natural capital. We have a very large portfolio in agriculture, and it's interesting to try out those methodologies in sustainable agriculture specifically. And so in the group, I think, we have good soil to plant good seeds in, and I think the time is right for us to have these conversations. For a very long time now, we've been successfully managing impacts of our financing on nature, but what we haven't really been great on is looking at how our clients are dependent on natural capital. And I think the way that we used to bank is changing. And, it's no longer just providing a financial solution, but also providing an advisory aspect to our clients to inform them of how dependent they are on biodiversity and how they need to make sure that their processes are more efficient and that they are less dependent on nature and that they certainly don't deplete natural capital.
Let me just ask, because it's going to lead into what I'm going to ask Ravi in a minute, but what kind of data is your office responsible for getting the data that can allow people to make a decision on who's good and who's bad and who gets the cheaper loan and who doesn't?
Yes, so that is something, as I said, we've been measuring it for a very long time. And it was based on a credit decision on whether the loan was granted or not. And it may have been very conditional when it was granted. But the latest work that we are doing is focusing on the ESG rating of companies and looking at what they are doing well and what they're not doing well. And based on that, a credit rating and pricing will rely on these externalities. And that is the process that we are currently busy with.
Okay, well, Ravi, turning to you now, you're the data person on this panel. So tell me how this, the demand is changing. Are you finding still people are asking for climate data and nature is right out on the side and nobody's asking for it? Or are you seeing a change?
Sure. First of all, thank you for the introduction and setting the scene. It's a pleasure to be here and talking with our expert panelists. It goes without saying that understanding and mitigating the impacts of biodiversity loss requires a radical transformation and a shift in our economic ways of thinking and the business models that we develop moving forward. This is no longer simply an issue of reputational risk as it was beforehand, and now it's rather physical because this impacts companies' access to resources, which is quite important. From the ESG data provider perspective, biodiversity and nature risk related issues are something that we take very seriously here at ISS ESG. Currently, we cover nature and biodiversity risk in a number of our products. For instance, our SDG impact rating, looking at SDG 14 and 15, which covers life below water and life on land. Another example is our corporate rating, which we cover 40 different rating indicators on industry-specific biodiversity issues, just to give you some examples here. But what we hear from the market and from investors is that more is needed. And this is why we're expanding our biodiversity-related products and offerings in the coming months and years moving forward. This is largely, as it was mentioned previously, driven by the changes in regulatory environment, especially here in Europe, as well as the raising the public awareness of biodiversity-related issues. Just to give you an example, just last month in France, there was a publication of Article 29, which provided additional reporting requirement obligations for certain financial institutions as related to biodiversity impact, which is something that's quite important. Now, in contrast to reporting on climate change, where we have a specific set of goals and metrics in place, such as 1.5 degree alignment and the CO2 emission equivalent, nothing like that exists for biodiversity. And this is why we are very much looking forward to the development that are taking place as part of the CBD, Convention on Biological Diversity, as well as TNFD, which we'll discuss further tomorrow, as well as Antoine mentioning it today. But moving forward, I hope that we can use the lessons that we have learned in the past 20 years plus on nature protection and apply them in biodiversity in the coming years.
Well, it's interesting you mentioned regulation, where it hasn't come up yet. And of course, the EU is quite advanced in this area with the new taxonomy. And most recently on March the 10th of this year, the Sustainable Finance Reporting Directive that came into play. How are you seeing that changing the demands for data? A little bit more on that.
Sure. I think, well, the biggest problem here is measurement. What are we measuring here? What does it actually mean to measure biodiversity? Because depending on a different spatial scale, you're going to get different data. Are we talking about habitats here? Are we talking about ecosystem services? So those all need to be taken into consideration, and the regulations in some extent is not very clear. The second thing that we need to keep in mind, as I mentioned, is that we don't yet have a target in place similar to 1.5 degrees. So that's something that we're really looking forward in developing. Another issue is that we have been talking about climate change in the public sphere for the past 20 years or so. So a lot of my colleagues working in the financial sector might not be as familiar with the biodiversity related issues as they are with climate change. For many, I think still they're thinking of deforestation as the main issue, which is important, but it's not the main problem. So being able to raise awareness and educate those working in this sector is quite obviously an important task as well, along with the regulations.
Look, thanks for that sort of first round. Let's go into a bit more of a conversation between us all. So I'd like to say to you panelists, if you want to jump in and say something to react to something somebody else has said, just put up your hand. I can see you and say, well, I want to say something, and I'll come to you, okay? So Antoine, I'm going to come to you next, because talking about data, regulations, reporting, the TNFD, can you explain to people what the TNFD is, and a little bit about the launch tomorrow, and what we've been working on together with so many others, and what difference you think that could make over the next decade, say?
Yes, sure. So if we want to reorient financial flows, we will need to have disclosures that are comparable, that are traceable, that disclose the relevant elements, that are based on science, that give us information both on the impact of biodiversity on the businesses and on the businesses on biodiversity, that represent this in terms of, I would say, a negative impact, but of course also in terms of positive opportunities for nature and for the business, and negative impact for nature and for the business. So we need to create a real framework of what are the important things to disclose, and with which intention. This is basically what has been done by the TCFD up to now for climate. When you are a company and when you fill in your TCFD report, there is a list of important things on which you have to report, and the methodology to report, and we need now to have the same for nature. And I believe it's really transformational. It's really an element of transformation, because when TCFD started, it was the start of a real transformation of the reporting by the business on climate. And now I'm very confident that TNFD, Task Force for Nature-Based Financial Disclosures, will bring the same need and the same capacity for companies to report. I remember that 2 or 3 years ago, you started to hear that if you are not reporting, if you are not doing your TCFD reporting, you will not be taken seriously on climate. So it's very important to understand that the TNFD initiative will generate the same impact for biodiversity, and this is essential. So this effort is an effort that comes at the same time from the initiative of some governments that perceive the importance of this very early, and namely the UK and the French government. Of course, some NGOs such as Global Canopy, Andrew, and the WWF, and of course international organizations such as several UN agencies who play a very important role in this, and of course some private companies among which you can find banks or insurers like BNP Paribas, AXA, Rabobank, and Banorte, who have played an important role. And what is very I would say very encouraging is that we have done all this work within 9 months to create, to define the scope, to define the governance, to do it in a way where there was a very important agreement, a lot of points on which everybody agreed very easily. Of course, there were also a lot of technical discussions, but there were really very important fields of agreement, and we could gather two, I would say, two very emblematic and very charismatic chairs with Elizabeth Brema and David Craig. So of course it's only the beginning, but I believe it's yes, it's ready to implement a real change.
Yeah, I mean as you say, the work of the task force begins in a sense on the 11th of June, and it will last for nearly until the middle of 2023. To build the framework, test it, consult in a global effort. It's all very well though. These things they start voluntary, just like the climate task force was a voluntary framework. And Paris has shown some extraordinary leadership in that on biodiversity and finance, and also making the climate framework mandatory. Britain has followed quite a long time later. France has been out in front. How important are these steps to make do you think the nature framework might become mandatory one day?
Oh yes, it's you know my answer is now we have in my team I have appointed a very senior person to check the alignment between voluntary frameworks and regulatory requirements, which means that I would say the framework, the way climate and very soon nature are part of our business assessment is coming partly from voluntary efforts, then so regulators take it into account, understand that there is a risk that can be measured and assessed, and then there is always a kind of step-by-step between voluntary and regulatory steps. But yeah, definitely, it will be, what I mean is that it will both become much more regulatory, and it will also, at the same time, remain a part of the voluntary joint effort, but also the competitions. Because, for example, when I sell an asset to a client, before I was selling a certain degree of liquidity, risk, and return. And now I am also selling a certain degree of impact on climate and nature. And the best I assess this impact, the better I am a bank or an asset manager.
Well, let me go back to just Reza, because assessment, that's an important word, isn't it? And data. I just wanted a quick comment, Reza, because the time is running and obviously we've got other things to cover, but where are you going to get the data from to be able to advise companies on nature-related risk? Have you thought that through yet in the company?
Sure. I think first, a quick point regarding the comparability of data, which Antoine mentioned, which is quite important. We don't expect to see anything from TNFD in the next year or two, but in the meantime, I would say for those of in the audience who are interested to learn more, I highly recommend looking into the EU Business Biodiversity platform. They put out a report every 3 months or so, maybe longer, and they put out comparison of different metrics and standards that are out there, which is very detailed and something definitely look into. In terms of data that we get, it varies quite a bit. Obviously, it would be a mixture of GIS-based data information and vegetation on site, as well as if you're looking at a company and portfolio level, you're going to be using certain models. And those all depends on which area we're looking at.
Yeah, thank you. So may come back on some data issues later. Madeline, I'm going to come back to you now, just because I know you've been much involved in the informal working group of the task force for these last 9 months. And any reactions to what you've heard about the launch tomorrow, when David, Craig and Elizabeth and Rema will be talking about the task force and their hopes for it and ambitions? How do you see this working down in South Africa or in...
Yes, I'm very excited about the process. We did form part of the informal working group, and for good reason. We really like the structure of the TCFD. It's practical. It was easy for us to implement. It is aligned with our business and governance and strategy structures. And therefore, I very much like that the TNFD is written along the same lines, which means it's clear. The outcome is definitive. And it makes it so much easier for banks to understand what it is that is required. I anticipate that initially it will take some time to get your mind around the financial impacts of biodiversity, as it did with climate. But I am full of hope that we will have the same kind of scale of understanding and involvement in the group that we've seen with climate. And what I have been doing is sensitizing the climate work with biodiversity information in any case, in the meantime. So when we do move onto the TNFD, it's not going to be a big shift. It will almost be a natural step to follow. So I'm very excited about the process.
Excellent. Well, that's good to hear, music to my ears. We've got a lot of work to do over the next few years. And anybody who wants to listen in tomorrow to this conversation, I think just go to the TNFD website, which is tnfd.info, and you should be able to find how to get onto it there. Let's just think, but we've been talking a lot about risk and how you measure performance, and let's talk a bit more about the upside, the opportunities here. And Charlotte, I want to come back to you, because you know the innovations you made through the nature notes and the investments that you've been able to make, but none of this is really big enough or at scale for what's needed when we're talking about, trillion, you think of BlackRock, it's running $8 trillion in its portfolio. Even green bonds, even though they've been climbing a lot. And I just want to ask you, what's the biggest barrier that you see out there to getting more investment into nature?
Thanks, Andrew. There are a couple. I think one of the biggest is that anything that delivers impact from a conservation perspective is going to, by definition, almost be novel. It's a new structure, it's a new strategy, it's sourcing new revenues such as offset markets, and investors struggle with novelty, and it's something that's hard to underwrite, it's hard to price, and so absent the robust data that Reza and Antoine and Madeline have been talking about as being required for institutions to really price the risk to their portfolios and quantify the return, it's challenging for investors to jump in. No one got fired for buying Goldman Sachs stock, right, or IBM. That's the adage. And these novel structures represent unpriced risk, and I think that's a really big barrier for institutional investors. At the same time, I'm heartened by how much these investors are starting to see the risk, and I think they've rehearsed the process with climate and are now kind of at the real show with biodiversity. And it's trickier. It's much more complex, as we've been talking about, to assess biodiversity risk and price the value of natural capital. But we're taking strides, and I would say, let's not let the perfect be the enemy of the good, and let's directionally move and think about. It's not just agriculture, right? It's the water that supplies the commodities in your supply chain. It's the storm risk of your coastal investments. It's in everything if you think about it from a systems perspective. And directionally moving is better than doing nothing at all.
Yeah, risk is a big issue for this sort of thing. So we hear the word blended finance come up quite a lot. The idea that you can bring together private money that in some ways is de-risked by public money. Of course, this is probably familiar in public-private partnerships to build hospitals or things like that, you know, but in nature, it's rather newer. Can you tell us a bit about that? And are you seeing that picking up at all in the US? And how does a blended finance deal work?
Yeah, absolutely. And we use blended capital in most of our transactions because we're delivering a public good alongside a private return. And you know, one could argue that public dollars should be paying for the public goods. So one example is in the Cumberland Forest deal I spoke about earlier. The debt in that transaction comes from two places. First, the Doris Duke Charitable Foundation, which made a program-related investment to the Nature Conservancy. And then second, from the Clean Water Revolving Fund in the state of Virginia, which is public money supported by a federal guarantee. So it's very low cost. And it's designed to invest in infrastructure for clean water. And so it's a real innovation, which was recognized by the Environmental Protection Agency in the US, by the state of Virginia, to recognize that forest protection is a clean water infrastructure investment. And so they were able to provide around 20 million of debt to the fund, which translates into about 22,000 acres of forest protected permanently, and a watershed, you know, with a guaranteed clean supply for the future. We're also using blended finance in some sovereign issuances that we're working on, which we call blue bonds, play on green bonds, where we're providing credit enhancement from the US government to create commercial rates of return on distressed sovereign debt that we're restructuring in order to create sort of fiscal space for countries to invest in marine protection. We did our first deal of this kind in the Seychelles, where the Nature Conservancy was the capital provider, but we're looking at transactions globally where commercial capital will be the source of the debt restructuring funding, but supported with credit enhancement in a blended structure.
Yeah, the sovereign debt is an interesting one, and we're seeing moves to change the rating on sovereign debt. Countries, in other words, that countries that don't look after their natural capital, maybe the money for them should be more expensive, and countries that do look after their natural capital represent a lower risk, so they get cheaper money. Reza, do you see? I mean, I don't know if you do any country ratings or anything like that in your business, but are you seeing that sort of coming up? I know there's some World Bank is taking a look at this, and one or two others, changing the sovereign credit rating based on their use of nature.
Certainly. I mean, we do assess in our country rating products countries based on sustainability performance. We look at a number of different issues in terms of land use, water, agriculture, and I think there are 16 different biodiversity related standards and indicators that we look into. And obviously, this is something that gets updated and improved upon on a yearly basis as we see an increase in demand for this type of services.
Antoine, may I come back to you, because I want to talk about scale. Well, you may have a point about sovereign debt too, so maybe that, but also how do we, this is a systemic thing and at scale. I want to, you know, somebody once said to me, how'd you come up with $1 billion bond for nature? In the capital markets, they need much bigger ticket items, and no use having 10, 20 million. You've got to be up at $500 million and more. So could you talk a short comment on sovereign debt and a little bit on $1 billion scale investments? Oh, you're muted, Antoine. We've got 3 minutes.
Sorry, the reflection was not on sovereign debt, but on the fact that more and more we are in a position to incentivize all clients, countries, but also corporates. We have developed a lot of sustainability-linked loans, and there are more and more sustainability-linked loans which are linked to biodiversity. Regarding the scale, finance is very clever to put different things in portfolios that allow to have scale. So we have to, of course, the scale and the number of investors that will be interested in biodiversity will grow, and it will be part of the talent of finance to create the vehicles with this scale. And I am very confident that now, when we start to have serious frameworks, the scale will come.
Very interesting. So, Madeline, I'm going to give you the last word because we're out of time. We just got a few minutes left. So maybe you could give some reflections. You've been in the sustainability space for some time. How not only your own institution, but your hopes for the future on nature and finance with an Africa perspective.
So the one reflection I do have is what caught me about this panel is that it's called ethical finance, and I think in the end, it's not just a risk issue. It's not just about capital, but it's also about ethical decision making in terms of how we use biodiversity and ecosystems, and how we address change. So for me, I think South Africa is waking up to this. We are looking at carbon. We financed, we published a sustainable finance paper last year, and unexpectedly so, the focus initially is on climate, but we are pushing the South African government to focus on biodiversity next. So I think that there will be a lot of development in this space. In the meantime, we're taking our lead from the TNFD and from global movements, so that we can use that thought leadership in our own country as well.
Well, I'm afraid we've only got about a little over a minute left, so I thought I'd just say a few summary thoughts on what we've heard. We've heard a certain amount about numbers, and the problem with nature is it doesn't have any. When you're dealing with climate, you've got a target for 2 degrees or 1.5 if you want to try harder. And we have a currency. It's called a ton of CO2. But what do we have in nature? We don't have a target and we don't have a currency. It could be a hectare of something with some biodiversity on it. But we do have a target in the sense that do no harm by 2030, and 30% of the earth should be protected by 2030 and 50% by 2050. So maybe we should think about that in our portfolios, in our own lives. What's your pension fund doing? Go and ask your pension fund manager, are you destroying nature in my portfolio? Ask your bank what they're doing with your monthly salary check. You put it in the bank every month and then you forget about it until you take it out. So, what's the bank doing with your money? Making our money matter, I think, is going to become a big change. It's in a sense what I call the democratization of money. It's going to become something that we all have more say in, and so that it isn't harming our future or our children's future. So that's something we didn't talk about that much today, but it's an interesting movement. We've talked about regulations. Regulations are going to be important. We're seeing tightening regulations, especially in Europe, but it's going to percolate out into other areas. Sovereign debt. What happens if a country trashes its nature to make money and no doubt to help its poor people as well, but ends up getting a lower credit rating for its sovereign debt? That will change thinking as well. Disclosure, the TNFD coming along so that we can actually help measure banks and pension funds and insurers will be able to report and disclose on what they're doing about nature, not just climate, but nature too. That's going to be important. And just a word on ethics. This isn't all about risk and opportunity. Is there any morality to money? Well, should there be a duty of care on pension fund trustees that when you get a pension and it pays out when you're 60, you don't walk out into a wasteland that your pension fund has been funding? What's the point of that? A Chinese pension fund holder said to me once, we've realized that there's no point in having a pension fund if when you get out and you retire, you can't breathe the air. So that's something we all need to think about, isn't it? That's what natural capital is about. It's what the TNFD is about. It's what this panel has been about. So I wanted to, on behalf of the audience, to give a big thank you to Antoine, to Reza, to Charlotte, and to Madeline for giving their thoughts on this practical action on finance and nature, and to all of you, the audience, for listening in. And remember, my parting word is this, that if we don't change the movement of money, we will continue to finance ourselves into extinction. So this is big stuff. We've got to take it seriously, and it's beginning to happen. So with that, thank you very much for listening.